again, Solis Wealth family. Greg Solis here with the update. First of all, on the family front, this is kind of a big week this week. It's actually Monica and I celebrating 33 years of marriage. Unbelievable. It's gone by so fast, and it's been an extraordinary journey. I like to say we're failing our way to success, but here we are 33 years later. It's awesome. Emily also turns 21 years old on October 5th. She turned 21. I can't believe it. My precious little baby, 21 years old. It seemed like yesterday I was holding that precious little infant in my arms, crying and laughing at the same time. But I'm excited for Emily. She's doing great at TCU. Her and Nicole actually went to Cabo for her 21st birthday. Nicole threw a little party for her. A lot of her sorority girlfriends went there, and they just had a blast. So that's exciting. Jack's doing great. He's getting settled here in the desert. He got himself a new apartment, and he's doing well at Solis Wealth Management. We're excited to have him here. So a lot going on with the Solis family. All is well with us. I hope you and your family are doing well also. Well, market-wise, it's been a little challenging here that we're dealing with this government shutdown. This isn't new. We've dealt with these before. As a matter of fact, since 1976, we've had 20 of these shutdowns. The good news is the average shutdown usually only lasts about 8 days. The longest one we have was back in 2018. It was about 34 days that we shut down. So hopefully we won't see that this time. The markets do okay during this time. It creates a little volatility. It creates some uncertainty, but the markets really don't get too caught up in that. They're really still looking at how's consumer spending? How's business investments? How are earnings? What's the Fed doing with interest rates? The market is more concerned with those long-term fundamentals more than it is with these short-term political issues that we're dealing with. So be patient. We're being cautious as we deal with it. We'll watch it very closely, but we think this will be short-lived. We'll have this behind us in no time. We think any pullback here would be a good opportunity to be buying, and so we still think the fundamentals are intact. We do see the labor market softening a little bit, which I think will give the Fed an opportunity to lower rates again this month. So we're anticipating another 0.25% decrease in the Fed funds rate. That should help the market continue to rally. So overall, the economy is in good shape. Markets are trading at all-time highs. We've had a huge move over these last 6 months since we bottomed out back on April 7th. The S&P 500 is up over 35% since we bottomed out earlier this year. If you remember, the S&P 500 from peak to trough this year was down about 20%. We've made a full recovery and then some. So again, the story still looks good with artificial intelligence. Everything's moving along nicely. Portfolios are performing well. So from our end, everything's in good order, doing what it should be doing. But if you have questions, concerns, or updates, obviously never hesitate to call. You know we're always here for you. Also remember, November 7th, Client Appreciation Party. You don't want to miss this one. It's going to be awesome. I hope to see you there. Take care and God bless.